Hello. Beata Bukowski coming to you from Fairway Independent Mortgage. Another weekly economic update. The biggest news was mortgage interest rates, according to Freddie Mac, jumping up for the third week straight. Last week's jump was 0.11% on a weekly basis. The year-over-year basis, the increase is 0.55%. When it comes to the 15-year loan, the weekly increase was only about 0.1%, and on an annual basis, only about 0.25%. So 30-year fixed is moving definitely at a faster pace up than the 15-year loan. All this thanks to the Fed, who has released their minutes from the last meeting, talking about possibly increasing the Fed fund rate as early as March and moving away from buying mortgage-backed securities, which was originally incepted to stimulate the economy when the pandemic and the lockdown have started. In other news, headlines were stolen by the employment report, and at face value, it doesn't look very good. Only 199,000 jobs were created in the month of December. However, when one looks a little closer at the report, a different picture is drawn. For one, ADP, which is a largest payroll company in the U.S., reported 807,000 jobs in the private sector created, and most of it being in goods producing and service providing sectors. Also, what the employment reports data shows is simply a lot of people calling in sick and a lot of people not actively taking on employment because of now the eighth variant and the eighth wave of the COVID-19 pandemic. Unemployment did drop a bit month over month, and first time unemployment claims have dropped to 52-week level lows for a total of 1.72 million people all overall receiving unemployment. In housing news, CoreLogic's home price index showed in November property values going up 1.3%, which is a total annual pace of 18.1%. Meanwhile, Apartment List's national rent report for December showed rents up almost 18%, which is a record high. However, national index did fall 0.2% in December, which marks only the first and only month in all of last 12 months where rents dipped a bit. Lastly, Federal Housing Finance Agency has announced increases to their second home pricing, which simply will translate in higher mortgage interest rates starting this spring on all of second home financing. That's all I had for you this week. Beata Bukowski, over and out.